You're watching us here on Bazaar Morning Call. In case you just tuned in, after good cues from Wall Street overnight, we're seeing a green screen on the Asian markets, but the Gift Nifty is not reflecting that. In fact, it's absolutely flat at the open, so it's about 27 points on the upside. Let's get you individual stocks. We have our research team standing by with the CNBC-TV18 list of top stocks for the day. Let's start with Maruti Suzuki. A Reuters news break reveals that Maruti Suzuki's big launch for the year, the e-Vitara's production, may actually be delayed on the back of this rare earth magnets crisis. Parikshit joins in to get us more on this front. Parikshit.
Yes, Maruti Suzuki clearly feeling the heat as a result of China's export curbs on rare earth magnets. The big launch for them this year was the electric Vitara. They had showcased the e-Vitara with great fanfare at the Auto Expo. The plan was to start exports and have a commercial launch in India probably between July and August. All of that could be delayed right now because of the export curbs. And there is not enough stock of rare earth magnets to make the e-Vitaras, as many e-Vitaras as was planned earlier. We hear from sources that the company had an initial plan in April to make 88,000 electric Vitaras. That outlook was earlier slashed to 67,000. For the period between April and September, the company had a plan to make 26,500 electric Vitaras. Because of the current magnet crisis, that outlook has been slashed to 8,200 electric cars only. What Maruti hopes is to make up for the loss of production from October onwards. So they feel that the production can be adjusted and somehow the company will still manage to meet its revised production outlook for the e-Vitara at 67,000 units in the full fiscal year FY26. But for the moment, clearly there is a problem. We've been told by sources that the start of production has not been deferred. Production is taking place of the e-Vitara, but in small quantities, and perhaps this will be only for addressing the export market initially.
Got that, Parikshit. Thanks a lot for that. Well, let's hop across to Vamakshi. She's looking at IREDA. Morning, Vamakshi.
Good morning, Nigel. Well, IREDA has actually gone ahead and approved an allotment of almost 12 crore shares at an issue price of 165.1 for per share, which aggregates to 2,005 crores rather. Keep in mind that the QIP had opened on June 5, closed on June 10th, and the issue price that the company has now declared is very close to the indicative price that they were indicating. Out of the entire QIP, around 50% has been allocated to LIC. We also have Societe Generale as well as Morgan Stanley Asia picking up close to around 9% stake each. So good investors entering the stock. The development will be seen as positive.
Okay, all right, got that. Vamakshi will keep IREDA on our radar as well. Couple of more blocks expected today. Never a dull day when it comes to block trades. Vivek is tracking. Which are the companies this morning, Vivek?
Well, good morning. Never a dull day, especially when it comes to block deals. So today we are looking at two stocks. The first one is AB Capital, Aditya Birla Capital. A block is expected here. What we understand is that, as per the term sheet, Advent International, with whole stake in the company under the name of Jomai Investments, is looking to sell close to 1.4% of the total equity. The block size, is at, or the indicative price is at 238 rupees a share, indicating a block size of a little over 850 crore. So, expect a slight negative reaction, at least at the open, as far as AB Capital is concerned. But the other stock on the radar is Marksans Pharma. Here the seller is the Chinese private equity investor OrbiMed. They are looking to sell close to 2.27% of the total equity. Interestingly, no discount has been given as far as this particular block is concerned. So the indicative floor price is at close to 250 rupees a share. The deal size is slightly over 250 crore. So both of these stocks expect large trades in the session today.
Okay, Marksans Pharma and AB Capital. Got that, Vivek. Thank you very much. But guys, forget tariffs, forget trade deals, forget all of it. We have far more important news to discuss, and Mangalam is going to take it away because there's an excise duty hike in Maharashtra that's come through.
That is an excise duty.
Very grave. It's very grave news, Mangalam.
Well, it is grave news for the ones who consume, grave news for those who are shareholders. But, it wasn't entirely unexpected. I'll tell you why. Because we've been having conversations with industry leaders, and the big positive for the industry was the India-UK free trade agreement, which allowed a big cash on the bulk Scotch imports.
Yeah.
But that would have been a positive if states did not go ahead and increase the duty.
So they are demanding their pound of flesh.
So now what the centre has given, the states have taken away. And that is why after the UK FTA deal happened as well, we didn't see a big surge in any of these stocks because the street was awaiting clarity here. And that's exactly what has happened. Maharashtra government, and these are news reports because we don't have the official document yet, Maharashtra government has hiked excise duty of Indian-made foreign liquor by around 50 to 60%. How much was the cut on the bulk Scotch imports? It was halved, right? From 150%, it was brought down to 75%. So the important part is there will be an increase of 30 to 50% in terms of an initial price, but that is if all things are same. But we have to look at the net benefit, should be around 10 to 20% in terms of an increase. It's the highest ever percentage increase since 2011, also because it's also the highest ever percentage decrease in the bulk Scotch import. Maharashtra state volume contribution for the industry is about 10 to 12%. So United Spirits will be in focus, not United Breweries. You'll have Radico Khaitan, maybe some bit of allied blenders as well. So 20 to 22% of sales for United Spirits comes in from Maharashtra. 7 to 8% comes in from Radico Khaitan from Maharashtra. The likely EPS impact, as per analysts, could be around 6 to 8% and 2 to 3% for Radico Khaitan. See some red on these stocks. But two things, official document is awaited. Secondly, the net impact of this, X of the India-UK FTA, is something that we need to calculate. There will be an impact, maybe not to the extent that the street is fearing right now. And obviously, the benefit of the India-UK FTA will not be to the extent that the street was, rejoicing earlier. So the truth, as always, lies somewhere in the middle.
Well, that's right. We'll have to see whether or not demand is inelastic in nature.
Or maybe I will watch out for the other flight companies because a lot of people will be going to Gurugram, get a cheaper tipple there.
All right, that's about alcohol, but let's get back to tracking some of these telecom stocks. Tata Communications, they had an analyst meet. A lot of brokerages have written. Rima, tell us, what are the key highlights?
Well, let me just tell you, break it down, because it was a fairly comprehensive investor meet where they spoke about capabilities, their plans, etc. But the four key takeaways are: one, the company had laid out a data revenue aspiration. They wanted to double it to 28,000 by FY27. This was laid out in FY23. It was a 3-year plan. Now the company has pushed forward that by 1 year, which means data revenue hits 28,000 crore of aspiration by FY28. Anyway, analysts, as the last 2 years have progressed, things had slowed down. So it looked aggressive to achieve it in the first place in FY27. So it shouldn't come as a surprise. Secondly, there's one portion of their business, digital portfolio, which is currently loss-making. The EBITDA loss the company quantified was 900 crore last year in FY25. For that business, the company is hoping to achieve double-digit EBITDA margins. Again, but here they haven't specified the time, but that is the aspiration. Then on the asset monetization, because the company has 26% stake in data center JV, they have land banks, etc. Things are slow moving on the asset monetization, but they believe that can offset any adverse impact on the AGR case. And finally, the company is talking about the M&A opportunities. They're open to aid. So yeah, it's a negative that they've pushed forward the data revenue guidance, but as I said, it shouldn't come as a surprise, because to begin with, it looked aggressive and pretty difficult to achieve by the earlier timeline.
All right, Rima, thanks a lot for that. So that's about Tata Communications. Let's talk about a bunch of other stocks which are on our radar. Upasna joins in with what she has on Max Financial, Colte Patil and Keynes Tech. Upasna.
Good morning. First up, let me start with Max Financial Services. The board has appointed Sumit Madan as the MD and CEO of Axis Max Life Insurance for 5 years with effect from 1st of October. Mind you, he is currently the Chief Distribution Officer of Axis Max Life, and earlier board had approved early retirement of Prashant Tripathi as the MD and CEO of the company with effect from 30th of September. Hence, this stock remains in focus on the back of management rejig. Now, Colte Patil is the next one that we are looking out for. The CCI approves Blackstone's acquisition of 40% stake in the company for 1,150 crore. This acquisition will be executed via share subscription and share purchase agreement. With this, Blackstone makes an entry into the Indian residential market. Hence, even this stock will remain in focus. And lastly, coming to Keynes Technology, company's arm, that is Keynes Semicon, signs asset purchase agreement for Japan's Fujitsu General Electronic for nearly about 1.59 billion yen, which is nearly about 94 crores. This is mainly to purchase the production lines for power modules and the identify assets. So all in all, these three stocks will be on our radar today, and I expect all three of them to open in green.
Okay, all right, Upasana, got it. Thank you very much for that. Let's quickly recap our list of top stocks to watch today. The ones that have positive news flow around them are IREDA, Marksans Pharma, Tata Communications, Max Financial, Holte Patil Developers and Keynes Technology. The ones that have negative news flow around them would be Maruti, Aditya Birla Capital, United Spirits and Radico Khaitan. All right, and with that, let's move to commodities. We have, of course, as always, Manisha joining in with a quick roundup of the action. Manisha, good morning.
Morning, Sylvie. Thank you for that. I'll start with the crude oil prices, which have seen some profit taking, but still holding around that 7-week highs that we saw the markets hit yesterday. Well, two things that really seem to be impacting across commodities. One, the decline in US dollar index, holding just below 99. And the other is the focus on US and China trade talks as it enters the second straight day. Well, Canada also talking directly to US on tariffs is something that the markets have seen as a premium for many of these commodities. But after that very, very strong run that we saw in silver, platinum, palladium for the last 4 and 5 sessions, some consolidation is what the markets are looking at this point in time. 0.5% to 1% of a decline is what we saw across many of these commodities. Also, there's a bit of a risk on as we see global equity markets gain up. So there is some bit of a profit taking that the commodity markets have seen. Having said that, it is going to be about the U.S. inflation data today in the evening. That would set the course for the rest of the days for this week.
All right, Manisha, thanks a lot for that. We'll take note of that itself. And take a short break as well right now. On the other side, we'll discuss the rail stocks. Harshit Kapadia of Elara joins in to discuss the recent run-up that we've seen in a lot of these names.